What's up guys, it's Nathan here. In today's video, we're going to examine the recent ANZ-observed spending data, which highlights the noticeable decrease in Australian spending during the first half of March. We'll explore the factors behind this decline and discuss the potential effects it could have on the property market and wider economy. So let's dive in. According to the ANZ-observed spending data, there's been a broad-based decline in spending in the first half of March, with spending down 7.5% year on year in the first week to 18 March, and the average daily spending down 6.2% year on year in the month of March alone. This fall has primarily been driven by a fall in non-food retail spend, such as shopping, but discretionary services categories like entertainment and travel, which have performed exceptionally well throughout 2023, are also down. This data suggests that the long-anticipated spending slowdown might be finally starting to come through. ANZ's base case expectation is for spending momentum to slow down through 2023 as households juggle with the impact of rising interest rates and high inflation. Interestingly, we've also seen a softer spending data such as January ABS retail sales coming in below the October 22 levels in both original and seasonally adjusted terms. The key non-food retail categories like clothing and department store spending have also been hit hard, with figures down 18 and 9% year on year respectively in the week of 18 of March. Additionally, households have cut back on buying big ticket items like furniture, which is down 7% year on year. And if you find value in these videos, please consider hitting that subscribe button, as it really helps out the channel. And a big thank you to all our subscribers for your support. Inspires us to create more content we hope you enjoy. While travel agent spending remains strong, up 59% year on year, the total travel momentum has slowed, down 1% year on year. Entertainment, such as spending at cinemas, ticket agencies, and venues, have also fallen. This could indicate that consumers are becoming more cautious with their spending habits in light of the economic uncertainties. Central business district spending is still below pre-COVID levels across the country. Melbourne CBD spending is only 73% of the 2019 levels, while Brisbane, Perth, and Hobart are around 90%. Sydney CBD returned to pre-COVID levels late last year and has experienced a sharp decline in recent weeks. The share of dining and non-food retail spending online remains stable. However, there has been a dip in spending in buy now, pay later and other payment gateways, down 30% year on year. ANZ has been closely monitoring the spending data in the coming weeks. On the balance, we continue to expect the Reserve Bank of Australia to hike interest rates by 25 basis points in April, given the strength of the labour market and business sector. In addition to the ANZ spending slowdown in Australia, it's also important to discuss the recent decision made by the US Federal Reserve in the United States. The Fed raised the federal funds target by 25 basis points and indicated that some additional policy firming may be appropriate. The Fed lowered the Q4 2023 GDP forecast by 0.1%, down to 0.4%, and the 2024 forecast down to 1.2% from the previous 1.6%. Both revisions may imply an expectation that tighter financial conditions will weigh on growth. The future path for federal funds will depend on upcoming economic data and how financial markets function, especially the provisions of credit. For the foreseeable future, the Fed will proceed cautiously. The Fed is keenly focused on the credit impact of the recent bank stress by raising interest rates a further 25 basis points and turning more dovish on the potential future of rate hikes. The Fed has toned down its guidance for future rate hikes. Powell acknowledged that there's been many uncertainties over how recent stresses in the banking sector will affect the economic activity, and the Fed is communicating with banks and monitoring the banking system's provisions for credit closely. And remember to share, like, and subscribe to stay informed with all the latest things property and finance. Powell also made it clear that the Fed will need strengthening supervisions and regulation to prevent banks failure like Silicon Valley Bank in the future. The latest summary of the economic projections reflects heightening uncertainty amongst the Fed members. The Fed's concern is that bank lending conditions could tighten which would negatively impact the economy. What are your thoughts? Leave a comment below. The recent ANZ-observed spending data reveals a slowdown in Australian spending during the first half of March, with potential impacts for the property market and broader economy. We'll also closely follow developments and the decision what the Reserve Bank does in April. Did you know here at Hunter Galloway we're mortgage brokers and we work with people Australia-wide. There's no cost to the service, so if you're looking to buy your first home, an investment property, or even refinance, we can help. Call us on 1300 088 065 or visit our website huntergalloway.com.au. We can fill in a contact form and we'll get in touch. Guys, as always, thanks for watching and we'll see you next time.